You need to stop denominating your investments and portfolio in dollars immediately. And in today's video, I'm going to explain to you why this is so important to actually denominate your investments and portfolios in something else other than dollars to show whether your portfolio is increasing in real value or if it's just increasing in inflation like everything else. So without further ado, let me get started into this. So you might be wondering why on my screen right now is there a bottle of extra virgin olive oil? And I'm going to give a pretty simple analogy to why this is the case here and why I'm going to explain this. So, just for a little background, I am of Italian descent. So, in Italian cuisine and food and culture, extra virgin olive oil is in abundance. So, it's something pretty heavy in the diet. Anyways, I was having a discussion with my mother about olive oil, and she was essentially talking about how 10 to 15 years ago, this exact brand and bottle of olive oil was going for around $4 and would go on sale for around $2.50. Now, if you fast forward 10 to 15 years ahead to present day, this exact bottle of olive oil is going for closer to $14 that will go on sale for $10. So if you do the math on that, that's approximately a 400 to 500% gain or increase of extra virgin olive oil cost for this exact same bottle. And if we were to pretend this was an investment, now I'm just going to say that for this analogy because, of course, olive oil expires and it wouldn't last 10 to 15 years. But just for the sake of the story, if we were to say this was an investment, that's actually outperforming the bond market by quite a bit. And the reality is, this extra virgin olive oil did not get 400 or 500% better. In fact, it's exactly the same. If anything, it might have decreased in quality, we can say. But that's just the reality, though, like with this inflation, and we can apply the principles to investments as well, that they may not be increasing 3, 4, 500% because the value is getting better, but it's just because of the debasement of the dollar and inflation just going rampant, causing everything else to increase. So just keep this in mind as we go through the video. Next, I'm just going to go deep dive into this chart right here, which is the purchasing power of the consumer dollar. So we can see within this graph here that since the Federal Reserve was established in 1913, the purchasing power of the dollar has just been on an absolute decline. I mean, it's down 97% since 1913. And this chart is just going to keep going towards down, trending towards zero. And essentially, what's going on here is you're working for and saving and denominating your portfolio in a currency that is mathematically designed to go to zero. This, if you were to see this as an investment or some sort of vehicle, you would think that this is just a rug pull. It's just going straight to zero. But the reality is that this is a feature of the dollar and is not a bug. And this is one point why you need to stop denominating assets in the US dollar. If it's just decreasing in purchasing power, it just doesn't make any sense. Um, as I move forward here, another interesting chart I want to bring up is this one by Mark J. Perry, and it's known as the chart of the century. And what this is showing here is your purchasing power is going down in regards to inflation of actual essential needs. So we could see for housing, food, childcare, college, hospital services, the inflation is going rampant. But the counterpoint to that is we can see that cheaper things that are non essential, such as new cars, cell phone services, toys, televisions, are actually not inflating as much, or in some case, are deflating and getting cheaper. And this is essentially just a big distraction from the money printing because the actual cost of survival becomes unaffordable between what's actually going on in reality. And there's a split because what goes on is survival becomes unaffordable, and you see the split between the distraction economy and the survival economy. So this just puts another perspective of how you may get distracted and not be able to see how the value of the dollar just keeps getting debased because of distractions like this. So I digress further here into another point. This is a very interesting website that I came across, which is WTF Happened in 1971. And before I get into what this website is and what these charts are, just for a little bit of history, in 1971 is when this incident occurred, which is the Nixon shock, which was the after effect of a set of economic policies announced by President Richard Nixon in 1971. There was abundance of things that occurred here, but the main takeaway from this is that it ended the convertibility of US dollars into gold, marking the start of today's fiat currency. Now, this is extremely important because it means that the dollar transitioned from being backed by anything physical into a fiat dollar. And what is a fiat dollar? It says here perfectly, fiat is money, is government issued money that isn't backed by a physical commodity such as gold or silver. Instead, it is backed by the government that issued it. So in other words, in 1971, the dollar went from being backed from gold to nothing but the imagination of everyone. This became the authority for them to turn on the money printers at any time they wanted and essentially cause this massive inflation, which is what we can see here in this What Happened in 1971 website. After this video, I do encourage everyone to go onto this website and take a look at themselves because there is an abundance of different charts that show this divergence of what happened in 1971 after the gold standard was ended. And just to go through a few of them here, we can see here worker pay has not kept pace with productivity since the 1970s. So you could see hourly compensation and net productivity for decades before was relatively the same with a little bit of a divergence, but it wasn't until the 1970s or 1971 to be precise, where we saw this huge divergence between them, where the net productivity is going up, but the compensation is staying a lot more flat. And this can be seen through a lot of different perspectives, as you can just see on the screen here. It goes into so many, even going back to my olive oil point, you can see that there was a huge bull market that's been going on with Campbell's condensed tomato soup, which is just absolutely absurd looking at these. I mean, more importantly, look at electricity, food, and fruit. 1971, again, huge divergence since then. And this is just going to keep happening. So, again, this just further solidifies my point to we shouldn't be denominating investments or portfolio in something that just keeps decreasing in value and is just backed by the imagination of everyone. So you might be asking yourself at this point in the video, then what should we be denominating or looking at our investments in? If everyone uses the dollar and every chart you see and you do all your analysis on the dollar, what should we be doing instead? So I'm going to give you two perspectives on what you should be doing instead. And the first one is going to be you should be denominating investments or assets in gold. So why gold? So the first point that I want to make is the 5,000 year ruler rule, which essentially is just saying that gold has been the standard value for over a millennia. This has been used for a long period of time as a store of value or an exchange. Like prior to the 1971, it was a lot more prevalent. But gold strips away all the noise of the money printing and shows you if an asset actually has gained value or if the currency has just lost value, because it also just removes inflation fog. So we could see even through the last decade of 2000 to 2013, since we're looking at the stock market, that's what occurred essentially, where stocks basically went nowhere. I mean, gold amplifies that even more. And gold is just also a neutral reserve asset of the central banks that are used today. It's the ultimate fear gauge. So if your asset is beating gold, then you are beating the baseline of wealth preservation. So gold is a very important asset to denominate other assets in to truly see if there is some viable performance within it. So we could see, just looking at the S&P 500 denominated in gold, we can see that actually, if you look at this chart, we are down probably 70% from all-time highs denominated in gold up to present day. Even if you were buying the stock market S&P 500 instead of buying gold over the past decade, I mean, you are probably still down 25 up to 40% down in terms of gold. So this really shows you the importance of, is there any value actually being generated, or is it just going up in terms of US dollar because of inflation? And the thing is, denominating in gold It doesn't mean you shouldn't be buying any or investing in any other assets, but it does show you a different perspective and can actually show you when there is good times to buy and whether an asset is worth buying. So just to further solidify that point here, I'm going to shift over here to Meta. So Meta, formerly Facebook, we can see here denominated in US dollars. It's been on a pretty crazy bull run since the IPO. And even over the past, if we're going to measure from the bottom of 2022 to present, it's up about 640% in terms of US dollar. But again, if we switch over to the gold denomination, we're going to see that it's actually only up 180%. So what we're doing here was just stripping away all the inflation noise and seeing how much quote unquote value was actually created in this asset over that period of time. And you can see here that if you were buying Meta instead of gold in the beginning of 2025, you're actually down 40%. Whereas if we do the same thing here, the beginning of 2025, you're still up 17% in regards of the US dollar. So this can kind of show you a little bit how much your value of the asset is increasing in real terms once we start stripping away the inflation. And this becomes even more prevalent once we start denominating in something that I personally think is even better, and that is Bitcoin. Now, you may be asking why. So I'll give you a couple of points to why that's the case before I dive into this chart. So 3 points. One is the absolute scarcity. So Bitcoin is actually the hardest money because compared to gold, which actually has about a 2% inflation rate, because gold doesn't have a cap supply. It goes through mining, which can increase the supply. It is only 2%, so it is nowhere near the same as fiat currency. It is a lot more stable. But Bitcoin, it has a hard cap of 21 million. It is the strictest ruler in human history in regards to money. It cannot be debased. It's impossible. And Bitcoin is also the fastest horse in the race. So once you start denominating assets in Bitcoin, it shows you the true opportunity cost of your investments. So if your stock or asset is not beating Bitcoin, you're just taking on more company risk for less reward. And ultimately, we're just living in the digital age. I mean, measuring your wealth in an analog metal is very good, but measuring it in digital energy actually reveals how rapidly the old financial system is bleeding in value compared to a new one. And this is unlocked even more once we start denominating the S&P 500 in terms of Bitcoin. So this chart I actually had to multiply by 10 million just so that we don't get something zero on the side. But we can see here over time, I mean, since the last 10 years, it's down almost 100% in regards to Bitcoin. Um, and even in more recent years, I mean, even right now, Bitcoin is going through a little bit of a hurdle. But even if we ignore that, you're still down 70% if you hold on to it for about 3 years in compared to the S&P 500, which again, it just shows you this chart. If you have a long term perspective, you can really see how this just is just going to keep trending towards zero. And it's just very interesting to look at. But again, I'm not going to say that you should only buy gold or you should only buy Bitcoin because I'm going to show you why also denominating in gold and Bitcoin can still prove why it's still good to buy other assets. So my next example here is going to be NVIDIA. So this is NVIDIA when it's denominated in gold. And we can see here that it's still, the chart looks amazing and it's in a crazy bull run compared to gold. I mean, if you bought, again, if we're going to take from the 2022 bottom, you're still up 550% in terms of value compared to gold. And we can see that it looks like it just keeps extending. So this can show the importance. It will kind of mute out the inflation when you denominate in this, but it can still show you the power of actual investments that people are going towards and value is being increased in. And the same argument can be made with Bitcoin. I mean, if you look at this chart as well, again, the gains are more muted compared to BTC's performance, but around the same thing. If we're taken from beginning of 2022, you're still up 330% on NVIDIA when denominated in Bitcoin. And the chart looks like it's going to keep extending up as well. So again, this isn't financial advice per se, or I'm trying to say buy NVIDIA, or I'm just using these as examples, but you can do this with your own favorite assets and your own portfolio go on TradingView right now and denominate it in either gold or Bitcoin and take a look at that chart. If the chart looks something more like this when you denominate it in either of those, you might want to start thinking differently on whether that's actually going to generate you wealth or if it's just going to be keeping up with inflation, because most of the charts over time, they just mirror the S&P 500 when it's denominated in fiat, because everything just keeps going up with inflation. So I would recommend you doing that just to give you a different perspective on things. And also, the next time you want to invest in something, I would suggest denominating it in gold and in BTC just to see if there's actually real opportunity or if it's just increasing with inflation. And finally, I'm just going to take a look at the two nails in the coffin here charts. And there's two of them I want to go over. And this is, instead of denominating Bitcoin in US dollars or gold in US dollars, I want to denominate US dollars in Bitcoin. And what this is basically showing you here is that it's just almost, we go back to this chart that I showed in the beginning of the video. It's the same effect. Your purchasing power just keeps going down. And it's the same thing when you denominate the US dollar in Bitcoin. It's just going down. I mean, it's down basically like almost 100%. Same thing with gold. I mean, over the time, it just keeps going down even more over time. Again, almost 100%. And these graphs are just going to keep going down, keep trending to zero, essentially. Like, that's what's going to keep happening as the dollar keeps debasing and the currency just keeps losing its value. And they keep turning on the money printer and nothing's going to change. So anyways, this was the rant of today. I'm just trying to show you the importance of denominating assets with something that's more hard other than fiat, which is either gold or Bitcoin, in my opinion. And it can really give you a different perspective on the best way to maybe make some educated decisions on whether it's a good time to buy or not. Because ultimately, if we're measuring things in fiat, everything's going to just keep going up over time. I mean, you just look at the S&P 500, you look at the chart, it's just going to keep going up over time. If you take almost any asset within the stock market, even real estate, for example, the charts all look the same. So you need to really start denominating it in something else to see if there's a opportunity cost in what you're buying, or if you should just stick to holding your wealth in a hard asset such as gold or Bitcoin. So anyways, I digress. That was it from me today. If you enjoyed this video, please give a like on this and subscribe, and also give a comment on what you think of this. I mean, do you agree that denominating in gold and Bitcoin is the way, or do you think this is maybe a flawed approach and you should be doing something else? I mean, I would love to hear your opinion. That's why I'm doing these videos, is just to spark the imagination and see what other people think. But regardless, that's it from me. I hope everyone enjoyed that video, and I hope you have a great day. Take care.